trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.
It's on a play, Patty, it's on a loop. It's a long one, yeah, but I'm doing stuff. Busy getting set up. I just want to keep my computer like a blank screen or boring stuff.
Guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
I'm here, just so you know.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding
Doing
me
a chart of
through my
Domino's
hopes and
Pizza
fears.
versus Google right
Tune
now.
in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow.
So here you go. This is what I was working on. And it's for the podcast. I was just trying to do this. Hold on, I got to turn on Do Not Disturb. I didn't turn that on. My buddy was joining too. He was on the phone. I blame him, Shane, for me being late. I said, Shane, there are people that need me because they tune in daily. They don't miss a single show. They sign up for the newsletter and let us help them grow. Making moves. But this is Domino's Pizza versus the S&P and Google. Domino's Pizza since 2004. This shocks me. I mean, you know, if you ate Domino's in the late 2000s, early 2000s, say you want, you had a Domino's Pizza in 2004. Okay, say it cost you $10. $10 in 2004. What's 10 times 2,818%?
It's 281.8.
So that $10 pizza cost you $281. Just kind of go into your head, The Gmail you signed up for in 2004 cost you nothing other than if you would put like $1,000 into Google, you'd have like, $4,000 today. So, no, 40,000. No. What's 10 to, hold on. No. What's 10 times 2,817%?
It's 281.7.
Yeah, it is 281. Why's my phone going? So far, Star, it's fake news. They have said they didn't. So if they did and they're lying, they would be up on charges. Nobody from the DOJ, remember, it's a news report. So nobody from the DOJ has said, yeah, we subpoenaed them. There hasn't been an official subpoena. So right now it's fake news. By the way, good morning, Chris, Star, Scott. You're welcome, Star. What up? Okay, I'm going to do some scans now. My buddy probably didn't even hear the damn song. Tune in daily, don't miss a single show. But he was discussing, I had posted yesterday on my personal Instagram that I had gotten teeth whitened and that I didn't use a filter. Spoiler, I did use a filter. MPLX just looks like it's just floundering and kind of just getting input, entries and exits and entries and exits. It is what it is, but I like that stock. MPLX again, brokerage holdings, Bitcoin. But I tell you what, since they switched the data at Trendspider, I'm noticing things just work way faster. Energy transfer over 16. Holding on to that 200-day. There is a question, and I don't know if I should do it or not, but there's a lot of stocks that seem to have come back down to their 200-day. And I want to look at, let's see. Ooh, DraftKings. DraftKings, and if anybody stayed up and watched the damn thing last night. Andres, good morning. What a game last night. I am tired. Exhausted. Merc with a nice entry in the algorithm. I don't think you can see any of this stuff that I do. And the screen yesterday, the screen was off. My apologies. I don't know why, but it was off. I just don't check a lot of this stuff. And I am using my MacBook Pro. The plan is to actually get a Mac Mini or a separate computer, not a PC, but a separate Mac. So it'll either be the Mini or the Studio here in the office. But I'm going to be traveling for November and December for the holidays. So I don't know. I mean, the reality is I won't be using it during those months anyway. Let me get over here and set up my YouTube so I can see your comments. Sabotaged Facts of Life reunion. I didn't get an ad today. Mother effer. YouTube, man, I don't know. I literally get groceries from the ads on Spotfiy every month. That's about what it pays for. It's about what it pays for. On YouTube, I pay for gas money. And FYI, I drive an electric vehicle. Douche. And YouTube charges more. But I just can't get anybody to watch over there. If you could do me a favor. Okay, this is what I want you to do. If I'm your favorite podcaster, go to my channel, view your channel, and I'm going to put this one out there. I know it's douchey. Share. We're going to copy this. Go on your social media and do me a favor. Just share that video. I know there might not be people with tons of followers and stuff like that out there, but go and share that. Okay. Let me see if there's anything popular here that I missed. DOJ antitrust probe into NVIDIA. I don't know that there is a DOJ. Bloomberg reported that NVIDIA and other companies received subpoena. Yeah, Bloomberg reported it. Nobody, publicly blacked the Justice Department in parent investigations. Nobody's done it. Okay. This was another one, and I'll talk about this. This guy bought a ton, Larry, of Lululemon yesterday. I think it was announced yesterday. He bought a ton of it. But look, I mean, the dude sold 25,000 shares in December at $500. It's 4,000 shares is nothing. This dude made $12 million in December, and by the way, that's not including his net worth. I looked up his net worth. It's like $30 million. So, and he sold, got half of it in December. This is like you getting, $100,000 in inheritance, $120,000 in inheritance, and deciding that, I'm going to put $1,000, $1,200, or I'm sorry, $12,000 into a stock. It's not, I don't know, maybe I'm making too much of a big deal about this, but let's see. Okay, index, we're going to go to the NASDAQ, and then we're going to go all. I'm going to go to all, and then we're going to say the 50-day and priced below. Okay, this is the NASDAQ 100. Right now you have 53 tickers below their 50-day. Let's go and look at the Dow, and you have, of the 30 stocks, you have 12. Okay, S&P 500, 173. So not even 50% of the S&P 500 are below their 50-day. We can see which ones, this might be, let's do a market cap, okay? The largest market cap right now that are below their 50-day, Microsoft, NVIDIA, Alphabet, Google, Amazon, Broadcom, Exxon. Maybe I'll do that. You know what? Let's do this. Yeah, let's do that. But use FinViz to quickly see. Okay, we're going to do that. We're going to go over there and do that. Let's look at the Qs. I mean, the Qs, we're at 461. I think you're going down to 450. In pre-market, you're at 460. It's coming back. I mean, ironically, those jobs numbers weren't great. The revisions were horrific. Just horrible. But the market wants to come back. People, again, I think I pointed out yesterday. People are bullish about the stock market. They want it to come back. So it's interesting. Okay, let's open up some of our links here. This is a great discussion from Ross and a bunch of traders, 7-day traders. And let me see where he puts it up. Yeah, they have over $18 million in trading profits around that table. Now, mind you, Ross is about 10, 12 million of that, I think, is what he claims, maybe 15. But these other guys are nothing to shun at. It's a good discussion, but realize they are day traders too. Let's see. Did Twitter? I think Trendspider posted this one about Broadcom too. I want to see this Broadcom chart. Did they post it yesterday? Before? I think it was before earnings they posted it. They posted it on Facebook. I know that. There we go. Okay. We're going to look at that one. Okay, we got that one. Education. Yeah. Okay, we're going to do that. Earnings. This was a good short.
Costco has a $58 billion dirty little.
There we go. That's a good one. Super Micro falls as JP Morgan cut stuff. Super Micro down 60% since inclusion, because a lot of people were touting on Twitter about Palantir today after the bell being added to the S&P 500. Oh, no. Yeah. We're going to pause that. Lockheed Martin, there we go. Let's look at his investment through 2000. Okay, there we go. This is Fred Lambert, who is the editor of electric.co. I thought this was a interesting one because I'm seeing a lot of people sell out, like early investors sell out of their
You familiar with?
there we go. Sell out of their stuff. Okay. Yeah. That chart amazes me. Let's see. We've got, this is where I want to bring in this chart. There we go. SMH. There we go. Did Buffett know something? I spent a lot of time on Twitter, just kind of scrolling around. And I think it's good to kind of, not always use Seeking Alpha, but to kind of look at some other stuff. Alpha Picks, I posted this picture about year-to-date performance of Alpha Picks. I'm going to go over my points yesterday, jobs revisions, Quan. I hope Quan doesn't hate me. And if Quan, if you're in here, I hope you don't hate me. I had to take down a Facebook post, just so you know. And it wasn't anything necessarily controversial. It had to do with Seeking Alpha. Your boy needs groceries. Offering a different offer on Seeking Alpha. So I hope people don't hate me for taking that one down. I don't think it was actually saving people money. I think it was, well, I shouldn't say that. If you're gonna, there was a offer with I'll have an offer, tomorrow, I think. There's an offer coming up with Seeking Alpha and Alpha Picks. But I'll say that here. I won't say it on the podcast because the podcast has way more listeners than this. But there is an offer coming out. Okay. Algorithm has you out. Let's see if it got you out on VOO. Yes. Okay. QQQ. I want to go into Savvy Trader. And we'll compare that against QQQ. We'll do this after the jobs report. Okay. Now I'm going to hit record. Okay. Somebody wants me to go one of my friend's kids wants me to go skydiving with her. Hell to the no, Jordan. Hell to the no. Hell to the no. Sorry. Let's see. Tesla. Tesla's up 1.77%. SMCI is down. JP Morgan finally gave up on them. The price targets are coming down. FBCG, just wait for it to open. That's a ridiculous. I don't even think it's trading at $39. It could be, but down 1.4%. Nvidia is up. I think Nvidia at 108. I think it's putting in a nice little shelf. The problem is the market cap. We talked about that one. Meta at 520. You had your chance to get that one at 508 yesterday. Google still under 160. Coke at 70. I think you sell Coke over 70, but I think it's a bit extended. I think SMCI will be, perfectly honest, lucky to get back to $500, but I'm waiting until some stuff comes out. The valuation is there. It's just the growth that they're going to have a problem with. And it wasn't the growth on the last earnings. It's the margins. But year-over-year growth is going to be an issue if people start pulling back a little bit. Okay. I do have quite a bit of... okay. What the hell? Now, why is this FinViz? We'll go over to FinViz and do some stuff with that. Okay. If you're new here, like and subscribe. I need that kind of put up behind me. I don't know. You know, my teeth do look white here, all lit up. They look as white as that QQQ symbol right there. Let me make sure it's still nope, it's not following me. We're going to hold up our hand. There we go. Now it should follow. There we go. Now it's following me. Okay. Good morning. Happy Friday. It is Friday. Oh, let me stop that. Let me rewind a little. Let me rewind a little bit because I know it takes a while once I hit record. Good morning. It is Friday, September 6th. First off, just to start off, there was a post in the private Facebook group about seeking alpha and offer, blah, blah, blah. Quan, I hope you don't hate me. I took it down. Your boy needs groceries. I mean, I don't think it was anything that was in particularly great. I think it's a good one, but again, I took it down. I hope you don't hate me, Quan. It was just something that I kind of made the decision at like 3 a.m. I saw it and I was like, ooh, let me just make that decision. And I did think about it for about a minute, maybe 2. So I was sitting there thinking about it. But where are we on Friday? Well, the jobs numbers came in. Non-farm payrolls growth shifts up in August, but falls short of expectation. I think the biggest thing was the revisions to June and July. August was bad, but it wasn't as bad as I think some people expected. The unemployment rate ticked down to 4.2 from 4.3. So that's good. They were expecting it to go back down to 4.1. Again, bad news is bad news, but it wasn't as bad as expected. So what happened with this? The expectations in September later for the Fed to cut went from almost assuredly a 50-point base cut to a 25-point base cut, but it also shifted to a 100% that we're going to go down by 1% by the end of the year. So whatever happens in September, then you got to live with it for the rest of September. Then you got to live with it for October. And then the decision right before the election is, again, are they going to cut? Well, if they go 25 basis points in September, you can almost assuredly expect a cut in November, but nobody wants to make it political, so they may go bigger in September. There's all these kinds of debates. I don't think it matters. I don't think that the determination will matter for the markets. If it's a 50 point, some people will say, hey, we're panicking and it's a bad job market and the market's going to go down. If it's a 25 point basis, then some people will freak out and say inflation isn't under control. The job market is eroding. What are you doing? You didn't go fast enough. They're in a bad position. And if they wait till November to do it, then they're going to be charged with, hey, you only did this for political purposes, even though Powell is a Trump appointee. Even though Powell, and I will repeat it, Powell is a Trump appointee. He took Yellen out, put Powell in. So I don't think they're political. I think Jay Powell is far from a political figure. I think he's trying to do what's best for the economy. And whatever he does, he's very much in the position of a politician. 50% of the people are going to hate him. What the market does, I think you don't fight the Fed. And what the market is telling you is, hey, there's a 25 or a 50% cut coming. And we know that. So you hold on to your market. You know, the market is telling you it's weak. The market right now is telling you that it doesn't like where we're at from a short standpoint. But when you look at a long-term standpoint, does this look like a tremendous crash? No. It feels like a crash for some reason. It feels uncomfortable. And I will be the first to admit that one. I'm 90% invested. I pulled 5% out at that August situation. I never got it back in. You enjoyed a nice 10% up, but I didn't put it back in. I will put it back in when I feel a little bit more comfortable. It is never comfortable to put more money into the market. I always feel that uncomfortable situation. There are very few times where I buy in and I'm like, oh my God, outstanding purchase. You know, that was the best thing ever. Very rarely do I ever have that. 2020, I felt like that. 2021, I felt like that. 2022, when I bought in the beginning of the year, didn't feel that way after, a couple of months. Sedge purchase, didn't feel that way. Deciding not to sell SMCI doesn't feel like a great buy at $1,000. So very, right now, very few times do you have a situation where you're 100% comfortable. That uncomfortable feeling comes, from getting burned. It's the confidence level. And if you trade and you get wins, that confidence muscle builds up. So, you want to build a portfolio? There's a couple of options. My point yesterday was the core portfolio here in Savvy Trader, okay? Yes, it's a $1 million portfolio. But you know what? It's 100 shares of everything. Don't look at the value of the portfolio. If it's 100 shares of everything and say you only have $10,000 and you want to buy it, break it up. You can buy fractional shares. Just these are 35 names that I like. You don't even have to buy all of them. Say you don't like Boeing. Say you're like Joe and you work for Boeing and too many insider secrets about the crap that's going on there. You don't want to buy it. Don't buy it. Don't buy it. Buy the other 34 names. Say you don't like Tesla. You don't like Elon Musk, which we'll go over later here. Don't buy it. Just don't buy it. It's down 15% since I bought it. It doesn't mean that it's a horrible stock. It's a tradable stock, and I own the car. There was a great segment yesterday on CNBC that I was listening to while I was out walking. And the segment was Kelly Evans and Dominic Chu basically saying, okay, we're going to set up an NFL team of stocks. And they picked their quarterback, they picked their lineman, they picked their tight end, they picked their running backs, they picked their wide receivers. And it was an offensive game. And so, and I'm trying to get a list of that for you, but it was just a masterful play on how to set up a portfolio. Kelly said, you know what? I'm in my Honda Odyssey driving around. I'm going to buy Honda. She said, we spend so much time at Kroger. We get our groceries delivered. I'm going to get Kroger. Dominic Chu, who's a big golfer, he said, I'm going to buy Topgolf and Callaway and TaylorMade and Titleist. And they found companies that they use, and they put those on their team. It's kind of simple. These are services that I've used. I've researched the companies, and I just picked them. And this was June of 2022 when I bought, and I think that was at all-time highs. I think many of these were at all-time highs. The point I was making is that you can pick a portfolio. You don't even have to manage it. Just pick stocks that are good quality stocks with good products, with good profits and good management. And in the long term, you should be fine. And that's the key, is if you don't know. And remember, VOO and QQQ and XLY and XLK are in this portfolio. It's not just single stocks. Many of these stocks are outperforming those indexes, but the basis of your portfolio should be in indexes unless you're proven over a period of time that you have an ability to pick stocks and win. Until that time is proven, I would urge you, get into ETFs because it broadens out your exposure. Those highs aren't those huge 10, 15, 20% gains in a day because your stock just reported record earnings. But like Broadcom yesterday, which reported great earnings, The guidance was fantastic. It was just not what the street expected, and it's down 10%. If that was the core of your portfolio, if that was 20 or 30% of your portfolio, then that doesn't make sense. It just doesn't. And so there's a lot of ways to set up a portfolio. You might hear people say, hey, I'm overweight technology in my portfolio. This is what they mean. When you go over here and you look, VOO, okay, technology is 32% of this portfolio. This is the S&P 500. Communications is 8%, consumer cyclical 10%, healthcare 11%, financials 12%. This is the S&P 500. Okay, it's 507 names. If you hear them say they're overweight technology, they're over 32% if they are matching the VOO. And they say they're overweight, so they may pull back on Apple stock. They may pull back on Microsoft because it's grown too much. You know, Stephanie Link is famous for this. She tries to match the S&P, but there are certain stocks that go overweight because they've gained so much. So she takes times when it's starting to pull back to trim those stocks. It's just, you want to figure out how to manage your portfolio. You want to figure that out. One of the other ways is Alpha Picks. Alpha Picks year to date. People bitch and complain that, hey, Super Micro is the main reason why Alpha Picks is up. Well, look at the year to date and look at how far, SMCI is down year to date. We'll go back and look at that. But look at Alpha Picks, up 24% year to date. The S&P is up 15. Okay. My daily stock pick core portfolio, year to date, it's up 28%. There's plenty of ways for you to pick stocks. And we can go over here and we can look at SMCI and let's see what SMCI is year to date. Year to date, this one's up 45%. So yeah, it hurts that you're down from the thousands. But you know what? If you were like Alpha Picks and you were in this in December, and remember, they trimmed throughout the year. SMCI was trimmed a couple of times throughout I think late last year, early this year, somewhere around there. Several times I know they've sent messages, hey, we're trimming. So you have to figure out, okay, how do I want to manage my portfolio? How do I do that? I woke up to the VIX overnight. This is a screenshot from 5:50 a.m., okay, when I opened up Seeking Alpha. The VIX was up 12%, up to 22. Let's go and take a look at the VIX. Because I had said, hey, the VIX wants to get back over 20. It has, and the market's come down. Right now, it's at 1924. So it wants to be at 20. I think the average, it was in a previous newsletter, I think the average was like 21 over the last 10, 20 years, somewhere around there. But you can ask AI what the average was. Another way to try and balance your portfolio or find entries is to use, and again, this is anybody can do this. This is 100% free. Go to the screener on FinViz and just pick an index. Say you want heavy tech, so you want the NASDAQ 100. What does this pull up? 101 names. Okay. Say you want to find ones that are trading under their 50-day SMA. And if you don't know what a 50-day SMA is, go and Google it. Okay, it's a standard moving average that many traders and many investment firms use. So you want to do it that, and then just sort it by market cap and find a large market cap stock that's trading under its 50-day. Because most of the time, these stocks will get back above their 50-day. Does it mean that they're going to make you money? No, the 50-day is a moving average. That's the point. But if it's well below its 50-day, you can make sure that it's going to get back up or over its 50-day. Now, let's take some of these, the large cap stocks: Microsoft, Nvidia, Google, Amazon, Broadcom, ASML, AMD, Qualcomm. There are plenty of them. Okay, of the NASDAQ 100, there are 53 names that are trading under the 50-day. That may not make you feel comfortable if you're in these stocks. Okay, we can go and we can look at that. What that means is pull up a daily chart. Okay. Look at the times when you had the opportunity to buy Microsoft under its 50-day. It never felt comfortable, never. But every time you had the chance to buy it under its 50-day, over time, it went back up above the 50-day. Now here on the daily, the 50-day is moving. You have a famous thing called the death cross, which is where the 50-day crosses under the 200-day. And that looks like it might be coming up if this 50-day continues to move down. You know, we can go and look, we can look at Amazon. Amazon is one trading under its 50-day on the daily. You know, would I suggest buying these? You have to have a plan to buy them. It's under its 50-day. Its 50-day is at 181. It's trading at 177. You know, under its 200-day, that red line's the 200-day. The blue line up here is the 50-day. But my point is, you can use FinViz to try and find these stocks. You know, say you want to trade, you know, the Dow. It's 30 freaking stocks. You want to find ones that are under its 50-day? 12 of them. Microsoft, Amazon, Merck, Chevron, Salesforce, AMZN, Caterpillar, Disney, Honeywell, Boeing, Intel, Dow. Again, there are points you can find these stocks. That's my point, is that you don't have to pay for tools. If you want to pay for tools, you can pay for tools. You can go out there, you can get Trendspider. You know, that's the top thing on Linktree. You can get Trendspider. It's $50 a month. If you're trading enough money, I would argue that Trendspider actually is a good tool. It simplifies things. As you start to make more money, you realize time matters. And so the ability to make things easy as you move along, that's what Trendspider does. It just makes it easy. The 4-hour algorithm, I can take a look at that chart, see if I'm in or out, see if I back test this stock, if it beats buy and hold. If it does, then maybe I want to look at the entries on that 4-hour algorithm. You get the 4-hour algorithm from me when you sign up for Trendspider through me. You know, say you go on FinViz and you find the ones that are under 50-day and you want to look at their valuation. That's where Seeking Alpha Premium comes in. And that's the second link on Linktree. You get $25 off and a free 7-day trial. So say you found Microsoft and you say, well, I want to go look at Microsoft. You go on Microsoft and you go over here and you say, ooh, Wall Street says it's a strong buy, but the quant says it's a hold. Let me look at the 5-factor grades in the quant. The valuation is a D. You don't really need to know what you're doing, but understand that Microsoft's PE is 34. The sector's trading at 22. It doesn't seem like it's the best opportunity there. The profitability, though, you look at it, their gross margins are 69%. The sector's trading at 49%. And then you go and you say, well, maybe I want to find another name. Well, CyberArk software names. Varonis, ones that I've never heard of. SentinelOne, which is cybersecurity. That's trading above this one. As far as the quant goes, the quant gives it ratings. You know, SentinelOne, this is one that's beaten down. When you look at this one, the valuation makes sense. When you go to Wall Street, 31 analysts cover this, and they have a price target that's 24% above. So that's how you use FinViz. You can use free tools. All I'm saying is the tools that I provide save you time. Say you don't even want to look up this stuff. Alpha Picks, the portfolio. We just went over the portfolio performance. So if you just want 2 stocks that are given to you each month, we just went over that portfolio performance. We just went over the Daily Stock Pick core portfolio performance. So I give you free options. I give you paid options. This isn't something where I'm trying to force something on you. I just realized when I started paying for tools, I got my time back. And that's what the tools give me. You can use free tools all day. There's nothing out there. I use free tools to mass my fortune. Doesn't mean that you have to pay for tools. So please don't get FOMO. Just understand that these are tools that I like and I put them out there. I'm not shilling for anybody. Let's see. There's the VIX. Again, we're going to close the core portfolio. One of the things that Buffett, I don't know if Buffett knew anything. He's still the largest. He sold a ton. $7 billion worth of Bank of America shares. Okay? Berkshire remains Bank of America's top shareholder. I contend Bank of America is still a core portfolio stock. It is below $40. I don't think that's a bad buy. We just talked about that death cross of the 50-day, that blue line crossing under. It looks like you may actually go for a golden cross, which is the 50-day crossing up. You know, we're trading above the 50-day and above the 200-day. Do you want to buy there? The MACD seems a little bit high. It seems like we might be heading into weakness. It's a Friday. Patience. This market requires patience. And so while I say, hey, I'm 90% invested, I've lost a tremendous amount of money since the middle of July. More money than probably most people have in their savings. And I still sleep at night. The reason is time in the market beats timing the market. And there's tax reasons, there's reasons to stay in this, but time in the market beats timing the market. And the two things for the month of August and the month of September, because we're in a weak seasonal period. And I want you to buy in September, but I want you to make sure that you're adding at smart times. I don't want you to just add nilly-willy. That's fine if you do it. If you add on every Friday because you have a paycheck, that's a strategy, and that's a winning strategy over time. But if you're just adding every now and then, I don't want you to be Bob. Bob added every now and then at the peak time. And while he did fine over time because he didn't take money out, I think there's a better way of doing it. And it's just finding that time to get in. It's never going to feel comfortable. So that's the point there. Now, per Becky Quick on CNBC, the semiconductor SMH still can't get above its 50-day moving average. A level to watch will be the 200-day at 216. It bounced below that moving average during the August 5th market sell-off. Let's look at SMH. Because what does SMH hold? It holds NVIDIA, it holds Qualcomm, it holds AMD, it holds all of the semiconductors. It holds Micron, which is one of the social requests today. So let's look at the SMH. Here on the 4-hour, it got you out with an 8% gain. Maybe this is one that you want to trade. You know, there's SOXL, which is a triple levered semiconductor ETF. But this one, 8% gain. Now, how does the algorithm perform? It's back tested over 2 years, 24.6 months. You make 120%. What do you make if you just bought and held this one? 102%. My point, there's better ways of trying to make money. Okay? There are times to get in, there are times to get out. But do not take 100% of your money out of the market because time in the market beats timing the market. That's it. But the SMH, when it's under the 50-day, look at the last time you had the chance to buy it under the 50-day. Here at 210. You're at 222 right now. You had the opportunity to get up to 270. So under the 200-day, if this is a stepping stair and we're going up there, you know, the algorithm doesn't have you in, looks weak. Would I be buying at 222? If I wanted to get into these names and I didn't have a position or I had just gotten out with this 8%, I would probably wait for confirmation, but it doesn't mean you should. It means you should buy when you feel comfortable. You're on the bottom end of this Bollinger Band. Maybe you have more downside. It's a Friday. I would urge patience. But if you just got out at this 244 and you want to get back in at 222, you just made yourself $20 per share. You literally, it doesn't matter if it goes down to 200, you can add more. If it goes back to 242, you just literally made yourself $20 per share. So when to get back in, that's my point. It's never comfortable to get back in. That's why you trim on the way up. You take a look at a weekly chart and you say, oh my God, this thing is, exploding up. Do I want to get in? Well, I should have probably gotten in when I touched this 200-day. I should have probably gotten in when I touched the 50-day. August 5th here, you touched the 50-day at $200. You're at 220 now, 222. It's a month away. So again, I just think, there are good ways of doing this. Becky Quick has a great tweet right there. Now, I did this chart because I constantly, I looked at this tweet from this guy, Michael Arude. The chart amazes me each time I see this, okay? This is back to 2004. This is Google versus Domino's Pizza. The orange line right there is DPZ. That's up 2,817%. Okay, the S&P's up 403%. Google's up 466. That's fantastic. All of this, it just amazes me. If you bought a $10 pizza back in 2004, could it, and you say you bought $100,000 worth of pizza, Domino's pizzas back in 2004. This goes back to setting up those football teams. If you bought $1,000 worth of pizza in 2004, why didn't you buy Domino's pizza? Why not? Sure, there were other pizza chains, but if you love Domino's and you bought Domino's, meant you should have bought it. If you signed up for a Gmail account in Google and you love Gmail, maybe meant that you should have bought that. The chart is fun. Now, this is a 21-day EMA. Tomorrow's jobs numbers look suspect with ADP numbers coming out today. I tweeted this well before the jobs numbers this morning. Again, the jobs numbers were kind of it wasn't anything great. Add to the fact that no one knows if the Fed will do a quarter or a half point, what the reason add seasonal weakness, and you've got caution. Nothing dramatic, though, in my opinion. That's the green line right there is the 21-day. Okay? That is a key figure, too. That is remember, 21 days means that you're just over 5 days in a trading week. You're just over 1 month. That's why 21 is such a key figure for a lot of traders, a lot of investors, is because 21 takes you out just more than 1 month. Well, if you're just out more than 1 month, you're trading under your moving average on SPY. Just caution, it's Friday. Just caution. I mean, that's all it means. Now, this guy posted, like Lulu CEO Calvin McDonald just bought $1 million worth of shares in the open market. It looks huge. If you go over here to FinViz and we look up Lulu, okay, I'm going to show you how huge it looks from an insider stare. And if you got an alert and said, oh my God, the CEO just bought $1 million, 4,000 shares, okay, here's the thing. I Googled, what's his net worth? It's $35 million. $1 million is like you having $35,000 in the bank and spending $1,000. Again, it's interesting, not life-changing, but it's interesting. The other thing that you notice down here, when you go down here to the red portion, in December 18th, 2023, this guy sold 25,000 shares at $497. He just bought back in 4,000 of those shares. So not even half of those shares he bought back in at less than half the price of or just about half the price of what he bought. It's not nothing, but it isn't like mind-blowing news. It's not. It's just something that hey, he might know something, but in my mind, I don't think that that's mind-blowing news. Now let's take a look at Lululemon because it is trading under $300. It's well under its 200-day. You can see that 200-day, just 2 earnings quarters. The algorithm has you out. The 50-day, it's just above it, but that's on a 4-hour. If you take a look at a daily, it's trading under its 50-day. So it's going to use that 50-day as resistance. These moving averages typically are resistance levels. That's why when I talk about the 9-day, the green line right there, I use that as confirmation. If you don't know what confirmation is, go over to my Daily Stock Pick newsletter, dailystockpick.substack.com. It's right down here in the education section. Just click see all, and you can go down here, and there's a confirmation portion where you can look at what is confirmation, and I go over it. And I go over everything, okay? This first one right here. I give you a free 7-day trial. There's no reason you can't read, 15, 16 articles in 7 days? But I show you exactly what it is. Now, Lululemon, do you want to buy in? That 50 days moving negative. You're trading near the top of the Bollinger Bands, which are cinching up. But you don't have a ton of oh my God, I've got to get back to these highs. It just doesn't make sense to me. Lululemon is still overpriced. Go over here to Seeking Alpha and we'll look up Lulu. And we see the valuation's a D. Why? Their PE is just a little bit stretched. Even their peg value, going forward, it's 1.72. In clothing? What are they going to do? Come out with a new set of shorts? Are people not aware that you can get Lulu knockoffs on Amazon for about 20% of what you would pay Lulu? Yes, Lulu is great for the people that have it. I went off on Spaces the other day about how the rich have plenty of money to spend. So if you got plenty of money to spend on Lulu, kudos to you. I don't know too many people that spend money on Lulu these days. But again, $261 a share. When you go over to Wall Street, there are 36 analysts that cover this. Their average price is $315. If you go back here to FinViz and we can look, what's the most recent one? Well, it's August 28th, 324, still higher than where it is today. But when you go to FinViz and you look down, look, they're chasing it down. Just like they chase it when it goes up, they chase it on the way down. So you take that with a grain of salt. Now, we can talk about the biggest blow up of the year, Celsius. Brian Stoffel does a masterclass on just breaking it down as to what happened. Pepsi had their inventories too high, blah, 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 blah. You know, again, if you like this drink, I would argue you should probably buy into this one. I still think that it's a little bit crazy. I didn't like their CEO. We talk about this all the time, how managers, management is an important part. The manager came on CNBC and the dude awkwardly stood there with a Celsius can in his hand. Never took one drink. Never took one freaking drink. Okay? I don't doubt that he drinks the product, but he never took one drink. Now, why is it a strong sell in the quant here? Let's take a look. Let me go back and see. You can learn why it is. Celsius has characteristics which have historically associated with poor stock performance, is overpriced, and has decelerated momentum when compared to other consumer staple stocks. It's 16 out of 16. You want a consumer staple stock that does well? Look at the other 16. Look at Keurig Dr. Pepper. Look at Pepsi. Pepsi's on its rebound. Coke is at an all-time high. Monster Beverage has been doing great. Any of these would be better than Celsius. So again, you have to understand, if you drink Celsius and you believe in this stock, go and do some research and buy into it. It might be the next great Apple. And speaking of Apple, the event, Hanhei, the main contract manufacturer for iPhones, published August monthly revenues of 33% year over year, the highest of the year, versus minus 7% for year 2023. While historically, Apple product launches are seldom news events, this AI-focused event on 9/9 has a chance to buck the trend. So, where are we on Apple stock? Well, the market opened up, we're up 0.23. The algorithm has you out at a nice 1.6% gain. The algorithm makes you 28% versus buy and hold makes you 37%. What does that tell me? Not a whole hell of a lot. You got to love the stock. I've got an iPad Pro here. I've got an iPhone. I've got an Apple Watch. I've got Mac, Apple Pods, the ear pods. I've got a MacBook Pro, and I thought about getting the Surface display. I didn't. Maybe that's my bad. But again, I have all of these Apple products. My entire house has Apple TVs on every TV in the house. I like it. I use this to try and find entries. Where do I find entries? I try and find them when they have confirmation after a buy, when the MACD is low enough, when the actual valuation of Apple makes sense. And right now, I don't think it makes that much sense. When you go and you look at the financials of this one, it's trading at 33 PE forward. That means you're trading 33 times future forecasted earnings. The growth better be amazing. Now, what Apple has for it is that they haven't had tremendous growth, but this is a behemoth of a company, and they need an enormous iPhone upgrade cycle, in order to take advantage of that. So, am I getting rid of my Apple? No. They're buying enough stock back. They're retiring enough stock. I think the management's good management. I think Tim Cook wants another couple of years in here. I don't think that you get a new manager in the next year or so. I think he's done a really great job since Steve Jobs passed away and handed the torch over. Again, I think he's a great CEO. And that's what you invest in with Apple, is you invest in that kind of guidance. As far as, I'm not giving up my Apple iPhone. The only reason Buffett sold this thing is because it's done so well. He didn't sell at the highs. But again, when you look at the Wall Street, and Wall Street says, hey, it's got a $237 price target, which is 5% above this, they're reaching. Look, they chased it up. So, again, you have to make these determinations. And we're just going over this because it's a Friday. Now, let's take a look at Tesla, because I saw a bunch, and I mean a bunch. So one of the things on Tesla, I post a lot about $ TSLA, which is how you kind of quote stock quotes in there. And TSLA, so a lot of people, a lot of longtime insiders were posting about how they're selling Tesla because it's up like 11, 12, 13% for no apparent reason other than Elon promises. And there's quite a few, and this particular person, Fred Lambert, he is the editor of electric.co, which is a newsletter about EVs. And he hasn't been a super Elon fan, but he originally invested in 2000 and I started reading this in 2016. He originally invested in 2010. So what I want to do is take a look. He got out, and he posted the reasons why he got out. Now, I've been perfectly clear on this podcast that I love my Tesla car. I love the Tesla technology. I love everything about Tesla. What I don't like about Tesla is the valuation. That's it. And it scares the hell out of me. And I've been wrong on this stock many, many times. It's down 2% here today. But let's take a look. We will go to a monthly on this. And we will take a look at Fred's investment because he originally invested in 2010. Okay. The IPO back here in July, we'll just say he invested at the IPO high. Okay. That was at $2.03. Getting out 14 years later with a 10,862% gain. That's, hey, he may be right. He may be 100% right that Tesla, it's gotten it wrong, that it's failed on its mission. And again, he puts it out there. I don't see Tesla as being aligned with the original mission, which was the main reason I invested in the company, to accelerate the advent of electric transport. I don't trust the leadership anymore, especially Elon Musk and the board of directors. There was a big talent exodus at Tesla in the last few years, and the talent is what makes the company great. Absolutely. I feel unaligned with the Tesla shareholder base. When you feel unaligned with shareholders, you have two options. Try to get them on your side or sell. I tried to get them on my side and I failed. Unrelated to Tesla, but I still feel a factor. I see signs of a recession coming and I want to be more liquid in case it's a bad one. So add those up. That's why he sold it. You can read. He links right here. I'll link to it in my newsletter, but he links to it to his full article, which is a good read, a very good read. It's interesting. I think it's really interesting, but understand this guy is up 10,000, almost 11,000%. That means if he put, let's say he put $10,000 in there. Let's see. What's 10,000 times 10,863%?
That would be 1,086,300.
I guarantee you that dude put more than $10,000 into this over time. Okay? And he's up. It was up 11% for no real reason other than full self-driving is coming. I can tell you I have full self-driving. I can also tell you that I tried it the other day and it pulled into a left-hand lane and just slammed on the brakes about 100 feet from the red light for no reason. Thank goodness nobody was behind me. But these are the problems that you, as an owner, you constantly see. And you see all of these videos out there and you see Elon touting this one. What you don't see is the real world, situation. And that's what scares me about Tesla. Okay. But I will tell you, here's the other argument. Former head of Tesla AI, Karpathy. I personally think Tesla is head of Waymo. I know it doesn't look like that, but I'm still very bullish on Tesla and its self-driving program. Tesla has a software problem and Waymo has a hardware problem. Software problems are much easier. The latest Tesla builds, they've made really good improvements. I'm really impressed with what the team is doing. Waymo looks like it's winning right now, but I think when we look back in 10 years, who's actually at scale and where most of the revenue is coming from, I still think Tesla are ahead. That's what you have to bet on. And so you have to bet on that's what's going on. Now, is Elon going to take Donald Trump and become like a government efficiency expert? Maybe. But the reality is, if you're betting on Tesla, you've got to be comfortable. We talked about this one. We'll talk about Costco, Costco next. This is 98. The PE is 98. You're paying 98 times earnings. And you may have a demand problem. I can tell you, I just bought a 2024 Model Y from a 2008, and I upgraded from a 2018 Model 3. It's probably 5 to 6 years before I get a new one. I'm not looking to upgrade. They make such good cars, and they upgrade them so frequently. It feels like a new car every 6 months. I'm not inclined to upgrade. Could I upgrade? Absolutely. Absolutely. That's what I'm pointing out, is that some of these guys that are big money, I don't think it makes sense to follow them, but do your own research and understand what you're actually investing in. Now, thanks to Trendspider, we can see insider buys and sells here. Lockheed Martin was awarded a $3.4 billion contract with the U.S. Army. Congress members have been loading the boat relentlessly for the past 24 months. Lockheed Martin has been doing really, really well. It's a defense contractor. And we can see, just since its last earnings, where it was trading around 460, 470, it's at 568. The algorithm makes you 8.6%. You make 31% just buying and holding. So look for entries on the algorithm. You take a look at the weekly, we're up above the Bollinger Bands. Did Congress know something? I don't know. It could be. Now, there's a lot of talk about core portfolio stock, Palantir joining the S&P. Well, Supermicro joined the S&P, stock down 60% since its inclusion. Let's look at Supermicro, because Supermicro actually had a good valuation. They weren't overpriced. They didn't have a huge PE. When you look at Palantir's got a valuation 94 times future earnings. Now, their growth is much better right now than what SMCI is. Their growth is 21%. Their levered free cash flow, they're growing at 24%. That's not great, but at least they're making money. Is this the one that you want to bet on with the inclusion into the S&P? I don't think that's a history of, oh my God, I've got to get into this stock. It could be a trade. Algorithm has you out, got you out with a nice 8% gain. You're seeing some weakness. Am I going to buy on a Friday hoping that they get added to the S&P and then Monday find out that we're all of a sudden in the recession? There's a major pullback going on right now on semis and a lot of stocks. I don't necessarily want to be in on a Friday when I'm seeing some weakness. Again, it's about patience. It's about being patient. Now, Supermicro, we can talk about being patient. I've been patient as hell with this one. We're under $400 right now. You're at $398. Okay, JP Morgan, which backed them just last week after the 10K delay, they said there's nothing to see here. Move on. Now they're saying, ooh, we're going to take it down. Our price target goes from $950 down to $500. So you tell me last week you held your $950 and now all of a sudden you cut it to $500. They chase it. That's what they do. And so you have to take this into your mind. Valuation, it's not crazy. Their growth, not crazy. But if they lied on some things, maybe it is crazy. So we talked about valuation. Costco. I tell you, I don't want to buy into Costco right now because it's 50 times earnings. Costco has a $58 million dirty little secret. The dirty little secret, they sell $58 million of their house brand products. Kirkland. And that's going up. That is a cause to buy into Costco. If they can sell more of their house product, the revenue growth goes up, but also their profit margins go up. Their sector median right now is horrible. The valuation is nuts on this one. The growth, their levered free cash flow, they're growing at 19%. That's great. The sector's growing at 16%, so you could buy a bunch of these. Costco's got the second. What's the number one? It's Walmart. And what's the valuation on Walmart? It's bad because it's 31 times forward earnings, but it's better than Costco. So understand that when you look at these things, that's what you've got to look at. You're always going to have conflicting information in the market, okay? Just like yesterday, okay? This was before the earnings yesterday. Broadcom. Will Pelosi lead us to the promised land? Pelosi famously bought in right here on June 12th, okay? Is it going to go up? Pelosi probably thought so. Broadcom's down 10%. It slid. They beat. They beat and announced a dividend. It was a good quarter. Their guidance wasn't perfect. And so when you look at this stock, the guidance needed to be perfect because their valuation is just too high. And that's what the street is finding. And do you want to buy this one on weakness? I would argue absolutely. This is part of the AI revolution. Now, do you want to buy into this one right now? It's a freaking Friday. Don't. Look at the weekly. The MACD is super high. The RSI is coming off of 59. It's down at 46 now. You'll have a chance to buy this one at a lower price. I think I'm in at like 136 or something. And yes, I could have sold up here at 170, 180. That was great. But I didn't. I'm holding on to it for a long term. It's in my brokerage portfolio. So again, you want to take all of this in. You want to take a look at it and just understand it. Here is a great discussion, okay? This is part of the education section. Ross from Warrior Trading talks with 6 other traders. $18 million in trading profits around that table. It's what, a 20-minute discussion? And one of the things that everybody says, process. Get a process in place. Get tools in place that help you make money. Find a direction. Okay? That's all you need to do. It's not that hard. And if you can't, just buy VOO or QQQ. I wish I could show you the large, the high net worth group that I'm in called Long Angle, because there are people who are touting some of these high income, ETFs like SPY and QQQYLD or whatever. And they're touting those things and they're just not proven. And even those high net worth people don't understand that an 18%, we'll get into one, the one of them, it's a REIT, NLY. We'll get into one. Even if they're giving you that money back, you're going to get that money taken out of your capital. So again, you want to make sure you listen to these guys. These are all momentum traders. Understand, this is not an investment discussion. This is a trading discussion. There is a big difference between the two. And I would argue my wins have far been bigger on my investments versus my trades. And I'm not winning on every one of them, but cutting your losers and make sure that you're adding to winners. That's how you make it. Now, social request. Kevin from YouTube, what are your thoughts on XLF? It's been fantastic. I mean, I went over it yesterday. I went over it earlier this week. I think we're in a multi-year breakout of XLF here. I think it looks really, really good. Look at this. I mean, we broke right through the previous all-time highs. It didn't even stop there. That $41 is now your resistance level, or I'm sorry, support. And if you look at XLF, if you look at XLF, so I will tell you 40% of this is, 23% is Berkshire Hathaway and JP Morgan. They have been on a tear. Visa, MasterCard, Bank of America, Wells Fargo. I own Bank of America and Wells Fargo. Of those, I own one share of Berkshire Hathaway. I think that the one that I bought the other day to celebrate Warren's birthday. I won't own JP Morgan Chase as long as Jamie Dimon is a CEO. And it's not because I don't like him. I think he's a very good manager. I just think he knew about the Epstein situation, and that's kind of my ding on it. Again, it's a moral thing. If you don't mind that, go ahead and buy JP Morgan. Don't let my morals get in the way of yours. I'm not saying I'm any better than anybody else. It's kind of like, I won't buy Philip Morris, but I buy Pepsi and Coke. They're all killing people. It's just a matter of what do you feel comfortable with. And so JP Morgan, I'll pass up those gains. But I'll buy Berkshire Hathaway in a heartbeat. I'll buy Visa. I'll buy MasterCard. I'll buy Bank of America, Wells Fargo. I don't mind, but Goldman Sachs is in the core portfolio. I think it's a great ETF. Do you want to buy it at all-time highs? It's trading between 45 and 31, and you're trading at 45 right now. I don't know. I mean, the momentum, fantastic momentum. I talk about this all the time. Of the 5 grade factors of an ETF, momentum, expenses, dividends, and risk, and liquidity, it's got an A in momentum. That's one of the strongest, up 10% year to date. If we go and look at this and we look at the market data and we sort this over 3 years, energy's number 1, technology number 2, industrials, the banking sector, XLF, it's number 4. It's up 18% over 3 years. But then you take it in And you go to 1 year, it's up 30% in 1 year. Year to date, it is up 19%. It is, utilities is the only one beating it this year. It's up 19%. So it's great. Would I buy it here? I'd probably wait for it to pull back to like 42, 43. I'd feel a little bit more comfortable there. But if you're just buying it for long term, you're not going to remember that you bought it between 45 and 43. Say you buy 100 shares. 100 shares of it is $4,500. 100 shares of it, but at 4,300 is $4,300. What's that $200 going to do for you? You could buy an Xbox with it. You could buy some stuff with it. But in the long term, it's not going to matter. You probably have a full-time job, Kevin. Unless you're watching the Giants lose all the time. But again, XLF, I think it's fine. Brandon from Twitter, AMZU. This is a double levered ETF, 2 times levered on Amazon. Okay. It does have 24.3 months. It's only 2 years old. The algorithm makes you 12% on this. Buying and holding makes you 14%. I would argue you do not want to buy and hold this. But this looks juicy as a trade. Okay. The algorithm got you in right here. And it got you in at what? 29 something. I can't really read it, but it's 29.68. 29.68. Trading at 29.38. Do you want to buy it on a Friday? It's a double levered ETF. I would say no. But if you're big on Amazon, go ahead and buy it. Go ahead and buy it. You take a look at the regular Amazon chart. The algorithm has you in. Go ahead and buy it. You're under your 200-day. You're just above your 50-day. You're kind of using that 50-day as your support level. So AMZU, I don't think it's a bad one. Again, I'm long on that one. NLY. This is Trey from email. By the way, that was Brandon from Twitter. NLY is Annaly Capital. And what are your thoughts on Annaly? It pays a 13% dividend, but isn't making any money. A 13% dividend sounds nice, though. Absolutely. 13% dividend sounds fantastic. Unless you're going upper left to bottom right. Let's just see, okay? Say you said, hey, it's going to pass through its 200-day. Let's look at this one. Wow, it's down 52% over 4 years. You think a 13% dividend yearly over 4 years is going to cover your 52%? Hell no. Hell no. There are better places in the market. So let's look at Annaly Capital. Is it making money? It's not covered by the quant. What is this? It's a REIT. It's a REIT, a diversified capital manager engages in mortgage finance. The company invests in agency mortgage-backed securities collateralized by residential mortgages. I don't know enough about this business to say, oh my God, it's fantastic. The Wall Street price target is $21. It's 4%. When you look at its dividend, its dividend is 12.91. That's the forward dividend. Okay? 5-year growth rate, minus 10%. So you're losing 10% to gain 12%. Dividend growth, 0 years. They're not increasing their dividend. So I don't like this. When we look at the financials of this, yes, they are making money. It's not true that they're not making money. They're just not making a profit. So if you're paying 13% out and you're not making a profit, again, you're not making a profit. I don't get it. It sounds great, but companies that pay these huge dividends, they just tend to lose the capital at the end. And all of a sudden, they're issuing more stock in order to pay the dividend, or they're cutting the dividend, which kills the stock. It's a losing game. I just don't get it. There are plenty of stocks out there that make money, and there is a time and place for REITs. I don't know that sector. Again, this is like asking McDonald's about a Whopper. In my mind, I don't think it's worth it, Trey. There's better places out there. But again, I'm a douche on the internet, so do your own research. Hey, Gary, can you cover Micron, strong in the quant? I love the podcast. Thanks for listening. Jeremy, let's look at Micron. It is strong. It is super, super strong. And it's had this strong buy rating since 102. Okay, since $102 and you're at 86, and it continues to go down. This is part of semiconductors being cyclical, and they're getting killed. The specifics about Micron. is look at the profit margin. They have an 11% profit margin where the rest of the sector has a 49% profit margin. Okay, that's just average. When you look at the valuation, they are not cash flow positive. Let's see, they're levered cash flow. They don't have any money that they're making. And that's the problem. Now, when this turns into an actual money-making machine, then you can take it. And the reason it's so strong on the quant is because they are turning CapEx into sales. Their EBITDA margin, very good, 28%. But again, that's all, accounting kind of stuff. Now, the revision, when we look at the revisions, 27 up, 2 down, 29 up on revenue, 1 down. When you look at the ratings and you look at Wall Street ratings, they all say it's a buy, $159 price target. But you take a look at that, and they chased it up. Now, the stock looks really juicy. It's a company where they make specialized chips, and their chips are needed. I don't specifically know what they do, but I know their chips are needed. The problem is the profitability, and you've broken your 50-day. So from a technical standpoint, when we look at this daily chart, your 50-day is going down towards the 200. That's going to take momentum. Okay, momentum's going to be down. The previous highs where you saw this at $97, okay, we'll go back here. It was the 2021. We'll look at the weekly because that will be probably the previous all-time highs. Yeah, this is going all the way back to like 2000. Let's go to monthly. We can't even do it on a weekly. You're going all the way back to 2000, July of 2000. That's where you're trading. Where could you go down to? Look at this stock. Again, look at that stock. So where could you go down to? On a monthly basis, your MACD is just starting to cross down. Your RSI is coming off of 76 back in June. Now, in September so far, you're at 50. What happened the last time it was at 50? It kind of traded sideways. And then you got a huge bounce up with AI. They started talking about AI. Are you going to get that bounce up? I don't know. But I wouldn't expect this one to all of a sudden turn around. Momentum is a big factor in the stock market. And when you look at the momentum, you're down 33% over 3 months. You're down 5% over 6 months. Now, 9 months and 1 year, you're positive. But again, momentum is a hard factor to break. So I don't want somebody going in there and saying, hey, oh my God, I'm going to get this one. No, you're not. You can try and time it. The algorithm, it makes you 64% over the last 2 years, whereas you make 55% buying and holding. What happened? You had a nice 3% gain there. Maybe 8% gain. Great gain. You could have gotten more if you just, bought and sold over 100. But again, where's the downside on this one? I don't know. You're oversold at 28. Are you buying on a Friday? No. Are you selling on a Friday? I don't know that I'd necessarily sell into this one. But I definitely wouldn't add to it and try and dollar cost average. I definitely would not do that. You add dollar cost average on your way up, not on your way down. You dollar cost average. If you bought up here at 134, you don't dollar cost average during this time. You dollar cost average during this time from August 5th to August 22nd. You don't dollar cost average from July 2nd to August 5th. You absolutely do not. You dollar cost average when you have confirmation into strength. So let's talk about some of the bullish stocks. MPLX, this is up 0.5% today. MPLX, you buy it for the 9% dividend. You love that, Annaly Capital, which pays a 13%. I'd much rather have MPLX. That is an energy stock that pays a 9% dividend. Look at that growth, okay? That's the stock I want. Is it on its way down? I don't think so. I think if anything, it might be coming down to 36. But I'll take the 9% dividend and just buy on the sell on the dips there. I'll use the algorithm, which makes you 15% versus buying and holding makes you 28%. As that starts to flip, because it was making you more money buying it, using the algorithm. As that starts to flip, I'll start to trim it as it starts to get highs here. If I'm looking at this chart and I'm saying, where did it hit resistance before? Right around 40. We're at 43. That's when you want to start trimming. And if you're wondering, where did I get this? Well, look, you hit it once, you hit it twice, you hit it 3 times, and then you came up here and you passed right by it. So that turns into support. Okay, as you break that, that's when you want to get out of this stock. And this is a weekly. This is going to be a long-term buy and hold for me. Energy Transfer. This is another one. I think this one pays a 12% dividend. This is another one that you want to take a look at. Annaly Capital, total crap. Look at this one in the energy sector. You had this golden cross right here at 10. It's all the way up at 16. You got the CEO buying a ton of this stuff. So again, do you want to buy it? Probably not on a Friday, but this one has been a long-term buy and hold, even with the dividend. DKNG, this is DraftKings. The algorithm just got you in at 35. After last night's game and them offering free, I think 3 months of, or 3 weeks or 1 month of NFL Plus. If you get it, I think it's what is it? Not DraftKings, but the other one that's offering Flutter. That's offering the NFL ticket for like 3 weeks or something. But yeah, you got those. You got PDD, General Dynamics. I'll put it on the newsletter. So I've went on for a while. I thought this was going to be a quick one. It wasn't. I just talked too much. My apologies. Have a great weekend. I will put out the paid newsletter tomorrow. We'll be doing something special maybe in the paid newsletter, so take a look for it. And the newsletter, just so you know, it's free during the week, dailystockpick.substack.com. If you have any questions, hit me up. Everything is on the link tree. The link is down below if you're watching the video, linktr.ee/dailystockpick. Have a great weekend. Bye. Okay. Man, it's hot in here. Why did I talk that much? Holy crap. Okay, let me see. Oh, I don't. Hold on. I got to look at your chats. Pulling back hard. Semis are taking it on his chin. My last time on PBBY. Yeah, great trade, Chris. Yeah, Scott, if I were you at 75%, I'd definitely be bargain shopping. I would be adding in. Because while we may go down further, you don't want to be that guy that's 75% when we start, moving up. SPY looks weak. I mean, everything just looks weak, and it's a Friday. But if you're 75% cash, that's a lot. I mean, I don't know that you necessarily want to load in, but depending, I'd probably take 5% of that and buy today. I wouldn't take 50% and buy today. I'd take 5% and buy today. Doesn't mean that you're not going to get down here to the, I think VOO is going to get to 500, but the difference between 500 and 503, that's nothing. That's nothing. QQQ, I think we're going to use 450. It's 455 right now. The difference is negligible. I'm what, 10% cash, I think. Yeah, 65-minute candles are good. That 65 minutes really good. And I agree with you, Troy. 6 to 7 weeks. I don't think that you want to be 75% cash for the next 6 to 7 weeks, though. I think leading into October, we may see our low mid-October. So I would probably take 5% of my cash position and load it into something. Because you don't, even though you're making, the 5% cash position, you may want to, what's that stock? 20-year treasury. Hold on, I'll find it. TMF. I think it's TMF. 20-year treasury, 3 times leveraged. As we start to lower rates, this one's going to get a bounce. I mean, you look at the weekly. That's through the rate rising. So I think, as the rates lower, I think this one comes back up. Might be a good bet for 5% of your cash, Scott. It very well might be a great bet. Again, it's daily leverage. I typically don't say, hey, buy and hold. But as you start to see rates come down, I think this one starts to really, really kind of push up there. You're already trading on the top of the Bollinger Bands. But look at the volume in this. I mean, volume drives price. And people are interested in this. And then once this gets out, it's probably going to be crazy. Yeah, Troy, elections mean nothing. There was Josh Brown did a great newsletter the other day, and an episode, I think it was last week, where he compared the performance of being in the market during the Democrats and in the markets during Republicans. Both were positive. You far outperformed under Democrats versus Republicans. And I'll caveat that with a little asterisk. Again, you far outperformed under Democrats than you did under Republicans. But the only reason was because you have far more years under Democrats than you do under Republicans, based on that chart. And it goes back to like the 1920s or something. It's a very long looking chart. So when do you think we know if SMCI was actually reporting inaccurate information? It took them, 12 months last time? They have said that they did not. So for right now, you have to believe that they didn't report bad information. Let's see. This is Barclays. CEO addressed short seller statements in a new letter. So September 3rd, he said, hey, it's all false and nothing of this is true. If he says that and then it turns out to be true, he goes to jail. Now, he's Taiwanese. It's probably not a great look for Taiwan. But does Taiwan turn him over and extradite him? I don't know. I mean, that'd be a tough one for the SEC to kind of, hold him, viable where, the SEC didn't hold one bank executive responsible for the bank collapse in 2008. So maybe he pays a fine, but again, you could sue him if you're a shareholder. So I don't know. I don't know when, Scott, to be honest with you. I'm playing with, and I've made this very clear, I'm playing with house money. So even if it goes down to zero, I'm not out of money. In certain number of my accounts, I might be down, but overall, I think I've taken profits on this enough so that I've made that thing. Now, Alpha Pick still thinks it's they haven't trimmed it. So I think their average purchase price, though, is like $100. So, but again, if you're thinking about, it's down 60% since it was added to the S&P. And it is 10:15. So I am going to leave you guys. Have a great weekend. And I'll talk to you tomorrow, or I'll talk to you Monday. I'll talk to you. Next week, just so you know my schedule, I will be traveling Thursday and Friday. So it'll be Monday, Tuesday, Wednesday. So, and I'll have some paid stuff out there maybe on Thursday and Friday for the paid members of the newsletter. But don't feel FOMO. I mean, there's nothing that I'm going to say that's going to move the markets or make you think about it. It's just more of a way to support me on the newsletter. So, okay. See you guys. Have a great weekend. I hope everyone enjoys it. Okay, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.